Hey guys, do you know how many times experts and big names have warned us about Bitcoin? They portrayed Bitcoin as a complete bubble, just pure speculation with no real value, and because of that, they kept millions of people from getting in early and really cashing in. Take Warren Buffett, for example, once called Bitcoin rat poison squared. And that was at a time when the price was a ridiculous $560. Just imagine what it would be worth today.
Not me. Of course, I would personally prefer what is certainly not met the precise definition of what constitutes currency.
Or Peter Zeihan, the geopolitical analyst from the US, he dismissed it as worthless when Bitcoin was at $16,000.
There is no intrinsic value to this asset. And now it's starting to be priced appropriately. So what's Bitcoin at? 16,000? It has 17,000.
Ugh. Really?
Yeah. There's no intrinsic value to this product.
And do you think that people just inherently lost faith in the idea behind crypto because of FTX? Well,
It's because it became an ideology. Whenever you invest based on an ideology, you're going to make some decisions that are a little divorced from math.
what do you mean by ideology?
Well, the people who really like crypto are convinced that it is the currency of the future and that a decentralized ledger is the way to go, and that anything controlled by a government entity is by definition a negative. And if it's run by the private sector freely, it will be better. And that's not how currency works. Currency is a method of exchange and a store of value, and for that, there has to be a degree of trust. And you have to have it managed in terms of volume. One of the craziest things about Bitcoin is that there will never be more than a certain number of units of Bitcoin. Well, by default, that means it can't be used for trade, because the whole idea of economic activity is that there is expansion, which means you need more currency to lubricate and manage that expansion. If the currency is locked at a specific number, you get monetary inflation, and that is one of the fastest ways to destroy an economic model.
So because of the lack of Bitcoin, because there is a certain controlled number, the only thing that can happen is that Bitcoin becomes more expensive. Right.
And that means that the people who hold it are the ones that make the money, but everyone else suffers. I'm sorry, that's not viable. The alternative is you have some private dude out there who generates the coins on a whim. How is that different from the monetary reserve or the monetary authorities that we have at the Federal Reserve, except for the point that there's no accountability? Number.
And take a look at the European Central Bank. There, Ulrich Bleinzeil and Jürgen Scharf criticized Bitcoin as being environmentally harmful and unstable. The price was $20,000 per Bitcoin. Peter Schiff, the gold enthusiast, kept tweeting that Bitcoin was going to crash when it was at $9,000 per Bitcoin. Dave Ramsey, the financial guru, advised people to stay away from Bitcoin when it was at $555 per Bitcoin.
And what is Bitcoin? Bitcoin is a currency on the internet. It has no value except to the extent that someone else will accept it from you as value. Just like that paper has no value except to the extent that someone else will accept it. So Bitcoin is the Iraqi dinar of the internet. And I know intelligent people who, while they're intelligent, are not wise, who have put a lot of money into Bitcoin. But it's a really good way to turn $1 million into nothing. Playing in unstable currencies and here's what you have. Let me tell you what Bitcoin is. It's WWW, it's the wild, wild west. You're back to the old Western banking system because all of a sudden, one of these computer nerds just flips a switch. The whole freaking thing is gone. It has no value. They just got completely ripped off and it took them down. And so the little hipster techie guys are sitting in front of the building with a sign that says, "Where's my money?" Well, honey, you never had any. It's not real money because it's not a stable currency backed by any kind of system or protected by any kind of system. Well, I made a lot of money in Bitcoin. You can make a lot of money trading dirt to someone else, trading dirt back and forth until people realize that trading dirt isn't such a good idea. You can trade gravel from your driveway for as long as you can get away with it. And just because you made some money doing it doesn't mean it was a smart idea. So I'll go ahead and, I've already got all you Iraqi dinar people and all you gold people mad at me. So let's just go ahead and add you Bitcoin people to the mix. You're stupid. You're going to lose your money. Go ahead and be mad at me. You shouldn't have put money into something crazy. Like
Charlie Munger called it disgusting and contrary to the interests of civilization at $425 per Bitcoin.
Bitcoin, right? We need to talk about Bitcoin in a minute. I can't wait to hear what Charlie Munger has to say about this. Let's bring in Charlie Munger, the vice chair of Berkshire Hathaway. Bill is going to move over so you can come sit in. Good morning, Charlie.
Good morning.
I just had to get your thought on Bitcoin, this digital currency that's out there that people say, oh, it might be the next big thing. What do you think?
I think it's rat poison. Put him down as undecided.
Do you understand what they're trying to do with it?
No, but I regard it as deeply flaky.
In Germany, Peter Bofinger, the former economic advisor, was no less harsh. He called it a pure air product without inflation protection, full of speculation and instability. And that was in 2022, when Bitcoin was at $23,000. Holger Chibitz, the financial journalist from Die Welt, tore apart proposals like Christian Lindner's for a Bitcoin reserve, arguing that it is too volatile and too young for central banks, and that the US only holds its Bitcoin reserves from seizures, not from purchases.
The designated US President Donald Trump is now also considering this, but so is FDP leader Lindner, who is proposing the same thing and thus striking the same note. From the perspective of the former finance minister, the Bundesbank and the ECB need, in addition to gold, both foreign currency and cryptocurrencies. The future Trump administration is pursuing an extremely progressive policy when it comes to crypto assets. Although the ECB and Bundesbank are independent in their decisions, Germany and Europe must not allow themselves to fall behind again in this area, says Lindner. Crypto assets now make up a significant portion of global wealth growth. And here with me in the studio is Holger Chibitz from our business editorial team, of course, an expert on money, crypto, stocks, ETFs, and everything that goes along with it. Great to have you here, Holger. So is it actually a sensible proposal to now include crypto in the reserves?
First of all, you have to ask yourself, why is he doing this? Or, of course, he's doing it because learning from America means learning to win. And I mean, the FDP is at 4%, so now he needs some topic he can score points with. And now let's think about it. What percentage of Germans actually own crypto? 12%? And if he manages to get just a few of them, those super crypto bros who say, man, Lindner is the one, then he's already won. So now the question is, you ask how sensible this is. We also have gold as currency reserves. 3,350 tons are stored at the Bundesbank, not just at the Bundesbank, but also partly in New York, partly in London. And it's worth about 270 billion. Now, should we add digital gold, which is what crypto or Bitcoin is, to that as well? And I'm not so sure about that yet. It's only existed since 2008, and it's still a relatively new thing. So whether you should just put some German money into it right away, or whether you should sell gold and put Bitcoin in instead, it's still too volatile for that. And in America, for example, they simply confiscated 200,000 Bitcoin. We had some of those in Saxony as well, but they were sold, and now they want to do this thing with the confiscated ones. In Germany, you'd have to start from scratch, and I'm not so sure about that.
But Holger, crypto does have a big advantage, especially Bitcoin. It can't be used in an inflationary way. There isn't that much of it.
You're absolutely right about that. The advantage is there are a maximum of 21 million Bitcoin, just Bitcoin. You have to make a distinction when he says cryptocurrency. I don't want him to include Solana or Ethereum or other things. It's really just about Bitcoin because Bitcoin is Bitcoin. It's truly a decentralized form of money that can't be increased. With Ethereum, Solana, or all the other cryptocurrencies, there's a private entity behind them that can expand the supply. So we definitely don't want those. Okay, now let's talk about Bitcoin. You're right about that. But gold is similar. Only a certain amount is extracted from the ground each year. The gold money supply increases by about 2%. It can't be increased arbitrarily either, and that's why it's okay for now.
I think 2025 will be an interesting year for the stock market, especially with Donald Trump. Holger, you'll be keeping an eye on all of this for us. Absolutely. I'm already looking forward to our conversations in the new year with you, and of course to your stock market podcast with Dietmar Deffner. There's a whole lot to talk about.
Maurice Höfgen, the economist, YouTuber, and MMT advocate who argues for unlimited money printing, has dismissed Bitcoin as a hedge against inflation. Anyone who bought in 2021 at high prices out of fear of inflation not only suffered losses, but would have had to add inflation on top if needed. According to Höfgen, Bitcoin is impractical for the real economy because payments have to be immediately converted into fiat. According to Höfgen, it's a pure zero-sum game where profits come at the expense of others. And the fixed supply of 21 million Bitcoin leads to crises with skyrocketing interest rates. He said all of this when the price was around $55,000 per Bitcoin.
So the promise of Bitcoin that it would protect you against inflation did not come true in the years 22 and 23. At one point, it even dropped down to, what was it, 25,000 euros or so. Now it's back up again, but at the moment when inflation was high, Bitcoin also failed to deliver on its promise as an inflation hedge. Anyone who bought earlier, for example, in 21, out of fear of inflation and at high prices, not only suffered losses on Bitcoin, but if they suddenly needed the money, they also had to deal with inflation on top of that. So in that case, Bitcoin failed to deliver on its promise as an inflation hedge. Now, of course, all the Bitcoiners will say to me, no, Maurice, zoom out. Yeah, look at the long term. Yeah, so now it's higher again too. That's all well and good. The speculation continues. Even with that extreme setback in 22, the Bitcoin hype wasn't completely broken. That's true. But in the real economy, the fact is that people can't always hold on to their money. Yeah. Even in countries where Bitcoin is accepted as payment, shop owners immediately exchange the Bitcoin for the local currency because they have to pay their taxes in that currency and they have to pay their suppliers. So this whole zoom out and hodl, just hold on to Bitcoin forever and it'll all work out. That's nice if you have money you don't need and can afford to speculate with. I wish everyone success with their speculation, but for a real economy where you have to make payments and so on, it's just not practical. And that's why no, Bitcoin is not, especially not for an entire national economy, the solution to inflation. That's especially true because Bitcoin is purely a zero-sum game. So with Bitcoin, anyone who makes a profit does so at someone else's expense. Because just like at a poker table, everyone who invests in poker brings money to the table and then it's redistributed. What one person wins, someone else loses. It's exactly the same with Bitcoin. Profits can only be redistributed from what was previously put on the table or exchanged in euros or US dollars. And that's why not everyone said truth. Perhaps not everyone can make profits with Bitcoin. Some people do, but not everyone. You always need someone who, even when prices are rising, still buys in at a high price. A little thought experiment. If now everyone at, where are we right now? 55,000 or so euros? Yeah, I think so. Yeah, roughly. If everyone wanted to sell at that price now, and probably many people have a green mark in their portfolio or wallet at that price, meaning profitach, then not everyone could do it. Not everyone can sell right now at that book value. If everyone wanted to do that, there simply wouldn't be enough buyers willing to buy in at that price. Then the price would drop and those book profits would suddenly turn into realized losses. That's why, Bitcoin is not the solution against inflation.
Nouriel Roubini, Dr. Doom, warned of a bubble when Bitcoin was at $17,000. Jamie Dimon, the CEO of JP Morgan, called Bitcoin a fraud when it was at $42,000 per Bitcoin.
You say gold is limited in supply and that's why you think it's a good hedge, just like Bitcoin. We get that. Yes, Bitcoins. No, that's not how it works. Come on, let's be serious. Let's keep it down. All Bitcoins are going to be mined.
Paul Krugman, the Nobel laureate, made a legendary wrong prediction in 1998. He said that by 2005 it would become clear that the impact of the internet on the economy would be no greater than that of the fax machine. Just imagine that though he completely underestimated the revolution of the internet. And that basically fits perfectly with this pattern of dismissing new technologies like Bitcoin as a Ponzi scheme when the price was around $700 per Bitcoin. And now just look at where we are today. The internet has turned the world upside down, just as Bitcoin is now shaking up the financial system with prices at $118,000 per Bitcoin and daily news about new investors and new companies constantly wanting to invest in Bitcoin, wanting to add Bitcoin to their balance sheets. The old skeptics are once again completely off the mark, and anyone who listens to them is missing out on huge opportunities. And then, in Germany, there's Buffett. They officially warned about total losses due to wild price swings and fraud. And that was in 2017-2018 when Bitcoin was at $17,000 per Bitcoin. And because of all these warnings, so many people hesitated, didn't invest, didn't buy Bitcoin, and missed out on opportunities. But just take a look at where we are today, where we stand now. We are on the way to a new financial system. Bitcoin is revolutionizing everything. More and more companies are jumping on the bandwagon. Almost every day there's news that another corporation or fund is investing in Bitcoin. ETFs are soaking up more and more money to buy more Bitcoin. BlackRock is buying more and more Bitcoin. MicroStrategy, led by Michael Saylor, is also buying more and more Bitcoin. And the current price of Bitcoin is just under $118,000 per Bitcoin, with experts even predicting $180,000 per Bitcoin by the end of the year. Those who believe the critics might now be sitting on the sidelines and feeling frustrated, but hey, it's never too late. So make sure to stay informed, think long term, and don't let old warnings or all these warnings scare you off because the future looks golden. And remember to store your crypto and Bitcoin offline as well. If you want to do that, click the link in the description below the video. Definitely take action because the critics won't tell you that you should store your Bitcoin offline. So store your Bitcoin and cryptocurrencies offline and don't listen to the skeptics because we're seeing more and more companies investing in Bitcoin and Bitcoin is being accepted more and more. Let's also take a look at the missed Bitcoin gains. If we had invested $1,000 in Bitcoin at that time, despite the experts' warnings, with today's price at nearly $118,000 per Bitcoin, with Warren Buffett at $560, that would have been 1.79 Bitcoin, today $210,700, a profit of $209,700 that we would have missed out on. Dave Ramsey warned at $555, that would have been 1.8 Bitcoin, today $212,600, the missed profit, $211,600 gone. Charlie Munger, $425, that would have been 2.35 Bitcoin. Today, that would be $277,600, the missed profit. $276,600. Then comes Paul Krugman, who also warned against the internet. He warned against Bitcoin when the Bitcoin price was at $700. At that time, that would have been 1.43 Bitcoin. As of today, that would be $168,571. The profit would be $167,571. As you can see, people would have missed out on tens of thousands of dollars if they had listened to these people, and very likely, many actually did listen to them. Don't fall for it, take action now.